Welcome to the Real Estate Investors Weekender Podcast. This podcast is brought to you by the award-winning editorial staff at NREIOnline.com. Let's jump right into this week's top news, features, and blog posts.
Welcome to the NREI Weekender with your host, David Bodamer. You know, normally we talk about the week's top news, but today David has actually brought in a special guest, and that is Nicole LaRusso. Nicole is the Director of Research and Analysis for CBRE and oversees all aspects of tri-state research with a keen focus on providing thought leadership for the region. Nicole has a deep background in real estate advisory and analysis and is a huge fan of podcasts, which makes it easy to have a podcast with her. So she's a huge fan, and she lives in Jersey City with her husband and 2 children. Good morning, you two. How are you?
Doing well.
Well, thanks. Great to be here.
Thanks for coming in, Nicole. I'm excited. David, you brought Nicole in. What are you guys talking about today?
Well, thank you so much for coming in and having a conversation.
I'm happy to be here. Thanks for having me.
So I know you do a ton of research. I was particularly interested in having a discussion about what's going on with Manhattan retail.
Yeah, it's definitely a hot topic these days, for sure.
Yeah, I mean, you know, obviously we're based in Manhattan, so we sort of see this every day. I think, but it's got some national implications as well, just in terms of probably echoes for challenges here that may be happening elsewhere. But I'm just kind of curious, you know, if you want to do some kind of what are sort of the key headline or takeaways that we have of the market right now?
Well, certainly retail is going through a very significant shift, and it's certainly not just specific to New York or Manhattan for that matter, but we are seeing it play out here. I would say the change in consumer habits and the ascension of e-commerce is really affecting the street level retail experience, and certainly a lot of stores are finding that they can't make the economics work. And so we're seeing closings and things, but it's not all doom and gloom. And I think that's the part that people don't necessarily understand or appreciate. And we try to make sure that story comes through.
So I mean, looking at the report, you know, there are, you know, obviously you're tracking leasing, what's going on with rents, you know, occupancies, rents. And I also find it interesting that you break it down into a bunch of these key corridors in the city. What's some of the narratives that you have seen in terms of the leasing activity, the kind of deals are getting signed, the kind of tenants that are active in the marketplace, and maybe what landlords are doing as well?
Sure. There's actually a lot to talk about in there. So, I mean, I think when I think about retail, first, I just like to start with kind of the big picture, which is when you think about retail in Manhattan, I think that story starts in like 2010 when the market started to get really hot. And for about 3 or 4 years, we saw just an ever increasing amount of rent, asking rents, and tenants sort of lining up to outbid one another to get more space and to pay higher and higher rents. And of course, investors sort of anticipated that would never end. And so bidding up asking prices. And by about the end of 2015 or so, sort of recognized that had really gotten unsustainable. And so in 2016, we start seeing rents kind of starting to fall. And that coincided with, I think, the real implications of e-commerce becoming a major force in retailing. And those two things combined together had a significant impact on retail in New York. And so we've seen since that happened, rents have been on a fairly steady decline from that peak level. And hasn't stopped yet. And we've certainly seen some of those closings, especially ones that have happened at kind of a national level, sort of playing out in New York as well. On the other hand, New York still remains a very, very strong market on the demand side, right? There's just the number of people living here, the amount of money that they're making, tourism, all the things that drive a healthy retail market continue to be strong here. So you have these two different sort of forces kind of playing out at the same time. And so what we're seeing is that as some companies, some retailers are recognizing that maybe the rent that they agreed to 3 or 4 years ago isn't something that they can maintain, or they can't maintain as many stores as they had before. The strong underlying demand in this market is propelling other kinds of retailers up into the fore. And we're seeing that certainly on the food and beverage side, fitness, health and beauty. I think actually healthcare is kind of a really interesting emerging retail or service, if you want to think retail really broadly. But that's one of those, we're seeing a lot of those kinds of tenants coming in, stepping into spaces that might not have been available to them a few years ago.
And are these, we're talking about new concepts or concepts that are maybe just new to New York City?
I'd say it's more on the new concept side. Although some of these concepts, fast casual is certainly not a new concept, right, but there's really been an explosion in that category of the different stores, different restaurants within that category. And so we're seeing a lot of that fast casual retailers opening here, and also fitness. But on the one, coming back to the sort of new concept, I think the storefront healthcare provider is a new thing. It's sort of a recent trend, maybe in the last few years, and probably in your neighborhood, as in mine. Every few months or so, I see another urgent care, right, or even primary care provider stepping into a ground floor space that I wouldn't have seen a few years ago. So that's, I think, an example of something that's sort of a new concept that's really taking off now.
And also, do things like some of these dental services now seem to have storefronts, like the Invisalign, or some of these ones that seem like a little different than just a standard dentist seem to be filling in as well. Are you seeing some of those too?
I don't know that I have a sort of experience with that in particular, but I do think healthcare as a service and sort of a walk-in on demand, that everyone wants whatever they want immediately. And I think healthcare is one of those services you don't want to have to sign up 3 weeks in advance to get a meeting with your doctor. You can just walk in to a doctor's office now in urgent care. And I think the business that is building up around that is sort of recognizing that storefronts are an important way to grow that offering in the market.
What about on the pressures from the owner side? So you sort of alluded to, like say somebody bought the building, within the past couple of years and had certain assumptions about the rents. Is that creating any pressures around, given where market rents might be versus where maybe they wanted to pencil things out? Is that creating any tensions in terms of like how deals are getting done?
It absolutely is. And I think that's one of the reasons why it's hard for rents to adjust kind of in real time is when an owner or an investor buys a property, especially if they get debt or a mortgage, they promise or they build that purchase on an expectation of revenue. And if they sign a lease at substantially below what that revenue was, well, then they might be on the hook to put more cash into the deal. Otherwise, they're in default of their loan agreement. With that said, you have to have a 20%, 80%, right? 20% equity to 80% loan. So I think just like in the housing crisis, it's a similar situation. So that has made some landlords very hesitant to accept lower rents, and that's why we maybe see some prolonged vacancies in the market. They don't want to give back the asset, or they don't want to have to go in for more cash. And if they can continue to carry it on an operating basis without having to accept a lower rent and change the valuation essentially of the property, then they'll do that as long as they can. But they're also trying to, some landlords are, the asking rent remains maybe high, but they're putting more cash, making more cash available to the tenant if they will take the space. They're very negotiable at this point, and trying to do a lot of things in order to get tenants to sign on.
In terms of looking at some of the corridors around the city, I think, in the report there are a number of main ones identified. Are there any differences in how some of those are performing, or is the narrative fairly consistent throughout Manhattan?
I think every corridor has been under pressure to, adjust rents to the sort of new normal. But some have been under more pressure than others. And I think the ones where rents rose in that time period between 2010 and 2015, where the rents really got heated and rose the most, those are the ones that have had the most pressure. I think Madison Avenue is particularly Upper Madison has been one of the most that has had to, really adjust to new circumstances. And we've seen both rents declining fairly considerably in that area, and also an increase in availabilities. So more spaces available. And, I think that's just a lot of those buildings turned over in that period of where rents were increasing. And so it's sort of been a confluence of challenges that have made that market a little bit harder hit, let's say, from a vacancy and a pricing standpoint. Whereas some markets, the downtown market is one that's been relatively stable through this period. And in part, it was not, 2010, 2015 was a time where the downtown financial district area around the World Trade Center was still kind of up and coming. And you didn't see that really dramatic rise in rents. And so that area has been able to kind of weather this recent storm a little bit better in terms of less pressure on rents. In fact, I think it's been a pretty steady increase even in recent years in pricing. So those are sort of the tale of two corridors, perhaps. But I think those sort of examples of the more the rents were under pressure, were escalating, the more pressure there's been to adjust.
So also recently we had the addition of Hudson Yards, which I think a lot of people have been paying attention to. So in terms of the market, that added some more space that needed to be filled, but it seems like it added some interesting tenants to the city, like for having like our first Neiman Marcus. Do you have any thoughts on that project and any kind of echo effects it's going to have for the rest of the market?
Yeah, I think it's been very highly anticipated and closely watched. It certainly seemed like a bold move a few years ago or more than a decade ago when it was proposed, and now opening in this environment definitely seems like even maybe a bolder move than we might have thought. But on the other hand, I think it's been considered fairly successful. Obviously, it's still very early days, but I think very well, really embraced. And that's an area that in a way is sort of a microcosm of larger New York, but I think really shows that as you have growth in residential, you have growth in office. I mean, there's been tremendous amounts of development on both of those. Plus you have public amenities, retail. You really need to have retail. It needs to be there for that area to thrive. And I think the developers in that area really understand that and really wanted to put a special retail set of amenities there to help that area really become a really fully fledged, successful neighborhood within the context of New York, where, you really can't have a dynamic, exciting New York experience if you don't have great food, you don't have fantastic shopping, lots of arts and cultural things going on within a short walk. And so Hudson Yards, that whole area really now has that with the opening of the shopping retail there.
And it seems like an interesting project, informed a bit by, I guess, like the era we live in terms of like the design of it. It seems to have a lot of focus on being like an Instagrammable project. It's brought in some restaurant concepts or expanded some that are up and coming or both, like I think of a blend of the city and some national ones. So it sort of seems like an interesting, I mean, from my perspective, an interesting project to watch to see how it does and maybe how it influences some other developments of this scale, maybe here and elsewhere.
Yeah, I think one of the things that they've really embraced there seems to be the idea of experiential, right? Yeah. It's not just about shopping. You can shop anywhere. You don't have to be in the store to shop. And so what drives people to show up at the store or show up in a place is what's the experience they're going to have there that they can't have at home or they can't have walking down the street while they're, on their mobile device doing whatever. You need to be in the place. There needs to be a reason why you want to be in that place. Right. And so I think what's really, and the concept that they're providing there has to be something that you can't get anywhere else. And so I think they're doing that really well. And if I was just perusing the website on my way over here, and I thought, it's like there's all these different happenings that they're advertising, not just in the space itself, but each store has its own special happenings. There's a reason to come, even if you were here 2 weeks ago. There's a new reason to show up in the store, and I think that is a trend that we're seeing. Obviously, it's not just in the shops at Hudson Yards, but it's really everywhere. And so why, as a customer, as a consumer, do I want to go to that place? It's because I'm going to have some sort of experience, some interaction with a product or other people that I can't have on my own. And that I think they're doing a really good job of that.
So you had another report that's about the New York retail market that looks specifically at F&B. And I was struck by how much money we spend on food and beverage in the city. I think the number was New Yorkers spend 130% more on food outside the home than their peers in the rest of the United States. And that equates to over $8,000 per year on food outside the home compared to $3,500 on average in the rest of the country. Which I think, you mentioned before how one of the tenant categories that's been signing deals is F&B. I guess that sort of speaks to one of the reasons that speaks to why is New Yorkers' penchant for spending like this?
Yeah, absolutely. I think, anyone who's lived in a New York apartment probably can attest that it's not necessarily set up for you to be a gourmet. And I've seen a few apartments that have little more than a mini fridge and a sink, and that's pretty much all the space you have to cook. And so New Yorkers really do like to be out and about, and they like to, part of the reason people live here, and certainly a big reason why people visit, is for the food scene. And I think that is certainly contributes to why New Yorkers spend more. Obviously, everything's more expensive in New York, so there's that factor too, but there's just more opportunity and more inclination to dine out. But also, I think we're seeing generally a trend particularly among younger people, millennials, is really wanting to spend their money on experiences. Mm-hmm. So I was talking about that experiential kind of concept in retailing, and food is the ultimate experience in a lot of ways. And you certainly can't, there's no substitute for eating on the internet, right? So you really have to, and going out, and socializing, Instagramming what you're eating, all of that is sort of part of the social scene for a lot of young people. And they'd rather spend their money on that than on material possessions. And so we're seeing a shift in spending in that direction too. And so all these things together kind of helping to support that food and beverage business. And certainly in New York. One other thing I think that's really interesting about the expansion of food and beverage concepts here in the city is that, historically retail landlords, didn't love the idea of having food in their buildings.
Mm-hmm.
And, there are lots of reasons why you might not like that. But as other retailers have kind of receded in terms of demand, which really created an opening for food and beverage. And so now we're seeing places that might not have been available to food and beverage operators. Now landlords are happy to take them. And so it's created more opportunity for all those new concepts that are developing to expand.
That's interesting. Yeah, that makes sense. I mean, it makes sense on all the levels why maybe you wouldn't have wanted it in the past, but why it may be attractive now. And then, I guess also tied to both the experiential is the number of delivery services we have available in New York City. We have like Caviar, Uber Eats, Seamless. I mean, there's a whole bunch of them. And then it seems like, I know, like when I go into some of these places now, there's a lot even more signage up that for like, and even maybe a special line or a special part of the counter for the delivery services to come in and pick up the food. So because it seems like that's maybe a growing percentage of the business out of the space is in addition to maybe the higher traffic they may be getting from people eating in, is also just this proliferation of an availability to get pretty much everything delivered to you now.
I totally agree. I'm sort of baffled every time I walk into a new restaurant. It's like a new service that I'm supposed to I should have the app for, and I kind of can't keep track of them all. But I agree, and I think it really touches on a larger trend that's not just present in food and beverage, but something we call Omnichannel, which is really this concept of the consumer wants to be able to interact with the brand or the retailer in sort of seamlessly across all channels. So that's online, that's mobile, that's in the store. And you're certainly seeing this play out in restaurants and in this, particularly the fast casual quick service business, where I see it in Starbucks, where people are able to place their order online on their phone. And then there's a separate area, sort of separate concierge and a separate fulfillment area where they have people that are just fulfilling mobile orders. There's a special line when you come into the store, and that's where you can pick up your merchandise. And I'm seeing that as I said, I'm seeing it in Starbucks. I'm seeing it in Dig In. I'm seeing it in lots of fast casual locations, but I'm also seeing it in Macy's.
Right.
I'm seeing it in lots of different places where retailers have had to create within the brick and mortar presence. They have to create that sort of space for the digital and the mobile sales channel to operate.
Right.
And I'm definitely seeing that on the food and beverage side for sure.
Yeah. So it's interesting so it's like we talk about, online retail as a force, and I think maybe have a tendency just to think about it as a percentage of sales, but in this case, it's actually causing literal reconfigurations of the physical spaces because of the way that we use these services now.
A successful retailer is really going to embrace all parts of that omnichannel strategy. So they're going to have a brick and mortar presence, they're going to have a mobile presence, they're going to have an online presence, and they're going to figure out how to create an experience for the customer that's seamless among all of those channels. And that in that way, online and mobile really enhances the overall business. It doesn't detract from the brick and mortar presence, but it really enhances that and integrates them together. And that's where we're seeing the most success among retailers today.
And just like on that thought too, for omnichannel retailers, it seems like also it's not necessarily one direction or another, right? Like some retailers that have traditionally been brick and mortar have become really good at incorporating, becoming omnichannel. And on the flip side, it seems like, we see things that maybe started as an online retailer now have physical spaces. I feel like I see that in New York with like Indochino or some of these services that started maybe as a place you get something online. Now you have a showroom.
Yeah, absolutely. I'm so glad you mentioned that because we call it clicks to bricks. I'm sure there's lots of other euphemisms for it, but I think that's true. And I think a lot of retailers that got their start online recognize that there's a limit to how much they can do from a marketing and customer engagement standpoint and volume of sales ultimately if they don't have a physical presence. And if you're going to have a physical presence, you want it to put that in the place with the most foot traffic and the most visibility. So New York has been sort of the epicenter of that clicks to bricks phenomenon. In particular, we see a lot of those tenants taking space in places like Grand Central and Soho, where there's just a tremendous amount of foot traffic and visibility. And that's right. Bonobos is one. I think you mentioned Indochino. Warby Parker got their start right online. So people forget that because we're sort of used to seeing the storefronts popping up everywhere. Sure. But more and more of them are, or they experiment with pop-ups as a sort of test the concept. But I think that's true that even online retailers recognize that there's a value to having a storefront, maybe selectively in a sort of smaller and manageable way, but as a way of further engaging and growing their customer base and their overall sales volume.
And it seems like historically New York has sometimes been like an incubator market for people to even test this stuff out, right? It's like,
absolutely.
It's like often a first market for people, either coming internationally or doing this kind of thing. So I think it is interesting to talk about like what's, how that's happening here.
Yeah, it's an expensive place to operate, but there's a reason for that because it's a very lucrative place to operate too. And if you have the right concept or you think you do and you want to test it, this is really a popular place to try that out.
Just to make another quick pivot, we talked a little bit in depth about F&B and how they've been doing. But in terms of some of the, maybe looking at some of the other tenant types, are there any other ones that we should pull out that have stories that we should be talking about?
Yeah, I think actually one of the most interesting ones is fitness. There's sort of concepts up and down from the luxury end to the lower end, but fitness is sort of here to stay and growing and trying to take smaller formats, some of them taking larger formats, integrating them with health or integrating them with food or integrating them with attire too. So there's a really versatile concept and we're seeing a lot of fitness. I think every quarter we recognize it's another really strong category of fitness. And I think that goes along with the F&B trend is that sort of you can't fitness. Well, I guess you can fitness a little bit online, but it helps to fitness in a place where you can exercise with other people. And obviously there's that whole Peloton phenomenon, but even Peloton has studios, right? So I think that just goes to show there's that real power in the place and participating with other people.
I've gotten sucked into the Peloton phenomenon myself. So, but yeah, they have that great showrooms or at least one. I'm not sure if they have more than, I know they have the big studio where they film the classes, but I thought they maybe even had a couple smaller showrooms in the city, if I'm not mistaken. But there's some of these other ones that are now seem like they're trying to piggyback off of that model and have their own device that's online, but the showroom in the city to
their own version of Omnichannel.
Yeah. So it all kind of resonates. But then outside fitness, are there other highlights?
One of the things I think has been maybe a little underappreciated has been the growth of, we have fast casual on the food side, but there's also fast fashion and it usually discount fashion. And so whether it's the Target or Marshalls or TJ Maxx or H&M and Zara, the sort of large format, lower price point that offer in particular a fashion concept, I think the idea is that customers really love to see what great new affordable clothing trend is going to be available to them. And they have a reason to come into the store often. And so those apparel retailers are actually doing quite well. And many of them have expanded in New York in the last few years.
And, we're sitting here, it's we're about halfway through 2019. We've been talking about what's been happening so far. You see, doing a little bit of forecasting. I mean, obviously things can always change, but what are we thinking about for the rest of the year? More of the same? Any reason to think that we're that there may be any big shifts coming?
I think that we're getting close to the right pricing structure. I think the biggest pricing drops in terms of the rent side are probably behind us at this point. Maybe that's wishful thinking, but I feel pretty confident that that's true, and starting to see that pricing leveling out a little bit. I think the demand has been strong, and we are seeing a lot of interest among tenants to sign deals. So I think that, might not have covered the whole readjustment of the market, but I think we are getting close, and I think we're sort of looking forward to more stability on retail into the future.
Well, I want to thank you for coming in and talking about all these highlights in the New York retail market. Your insights you're fabulous. It's been great talking to you, and thanks again.
Thank you for having me. I had a lot of fun.
Guys, thank you. This was a great podcast. Nicole, I'm thinking about that, the online fitness thing. You sure that's not going to take off? Just the webinar fitnesses or something? I think
if I can watch someone exercise for me on the internet, I'd be very happy.
You can figure out how to lose weight. I'm your first customer. And I think your kids would probably agree with me that online ice cream shops, they kind of suck too. So
yeah, absolutely.
Yeah, I'm all about the physical location with the actual ice cream. So, all right. Thank you so much for joining us today. I really appreciate it.
Thanks for having me. It was great.
You bet. And thank you all for listening to the NREI Weekender with your host, David Bodamer. If you have not subscribed to the podcast yet, please click the subscribe now button below. This way, when David comes out with a new podcast, it'll show up directly on your listening device. Again, thanks for listening today. For everyone at the NREI Weekender, this is Eric Johnson inviting you back next week for all the news that matters to you. And we'll see you soon.
Click the subscribe button below to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of NREI Informa. The content has been made available for informational and educational purposes only.